by 36 and 37, those little bear bars, it's clear that the high one was not going to work. But that does not mean that the market is going to sell off. It may just correct sideways. Okay, tight trading range, 2 legs down to 38, a 2-bar reversal at 39, and then an inside bar II at 40. I think it's an okay buy, but I think we're in a trading range, so I would only scalp it. To buy this, you need to believe the market is going to get up to the 32 high. That's 6 ticks higher. And it took the market a while to get up there. Tried to break out on 45, and I wanted to see what would happen after the breakout to see if I wanted to get long again at the high up here, or if it was going to be a final flag reversal. And it turned out to be a final flag reversal, and you had to be quick to short below 45. Personally, I don't think it's a great short anyway, because 20 gap bar test at the moving average. There should be buyers at the moving average, and they got their scalp out on 47. Again, more tight trading range type behavior. The breakout bar down at 46 had a problem because 47's high went 1 tick above the 45 low. And in the strongest breakouts, you don't get that overlap. So this makes me think that we're still going to go more sideways. Remember I said after the buy climax we could have 2 legs sideways to down. The move down to 38 may have been the first leg, and we may be creating the second leg here. Maybe we'll get an IOI buy setup, and we do here on 50. My problem is we got 3 or 4 bars that are relatively large, and it's forcing traders to buy at the high. If this weren't such a strong bull day, and if it wasn't holding the moving average so well, I would short probably at the 50 high. It turns out that a short there would have worked, but I did not take it. If you have 3 or more large overlapping bars, setting up a buy signal at the very high of it, probably more than 50% of the time, you're going to get a pullback at a minimum, and very often it'll hit a stop. Sometimes it'll even reverse. Okay, markets looks like it's setting up a little wedge bear flag here on up in the 54 area, and it's set up on the outside down bar on 55. But we're right above the trend line. We're holding the moving average. We're holding the breakout above 7. There's not much room to the low of the day for a short, so I think I'd rather not short. Okay, double bottom bull flag with 56, little high 2, 55 is the high 1, but a bear body, not a great looking setup. We're still holding above the moving average, so it might work, but I don't like any of this. It's tight trading range behavior. Okay, 57, 58, 2 decent bull bars, breaking out of the bull flag, so we could get a breakout pullback to a long. Arguably 59 is a wedge bear flag short. I think it's risky. I think it's more likely that there'll be buyers below for a breakout pullback long. And 60 was a bad looking signal bar for the breakout pullback long, because now you have 2 bear bars in a row. Eventually the market worked up. Actually, it only got up 5 ticks. I just looked at my other computer. Okay. Another wedge bear flag potential, short below 62, but I'm not shorting below bull bars. Okay, now 64, you get a bear bar, so that's another potential signal. Now you got IOI at 65 with a bull bar. This is a weak bull channel, and you cannot be buying above the highs of bars in a weak bull channel, especially one that's been going on for an hour or 2. So there's no way I'm going to buy that. If it breaks out to the upside and it looks like it's going to have follow through, then I'll buy. But I'm not buying at the top of a bull channel that has so many permanent bear bodies.